to today's video. We will be discussing the basics of budgeting. In our discussion, we will talk about what it is to budget, why it's important, what is the purpose of this video, how to budget, and then some do's and don'ts. Just a quick disclaimer. We are NWU students, and this video is published as a part of our group's initiative for an assignment.
What is budgeting? Budgeting is a process of financial planning of how to get the most out of your money by managing income and expenses. Why is it important? Well, according to Dave Ramsey, a budget is telling your money where to go instead of wondering where it went. And the importance of a personal budget is exactly that. It allows you to control exactly how much money you're spending. Trying to manage your finances without a budget is the most common cause of overspending.
Now let's move on to the purpose of this video, starting with the problem. Research indicates that there is a gender gap relating to financial literacy and objective financial knowledge. Differences in education and employment are seen as large contributing factors to this gender gap relating to finances. The solution. It would then be to improve gender equality in finance through education to women, starting with the basics. In this video, we aim to educate women on the basics of budgeting with an example and detailed explanation of how to budget effectively. How to budget, the tutorial. Let's have a quick overview of the steps relating to budgeting monthly. First, calculate your net income. List your monthly expenses, label fixed and variable expenses. Determine average monthly costs for each expense and then make adjustments. Let's look in a bit more detail at each of these steps. Calculating your net income. Now, usually your net income would be the amount indicated on your paycheck. To calculate this, it's just the gross income less mandatory and voluntary deductions like taxes, insurance, retirement deduction, and so on. Then list your monthly expenses. Put together a list of everything that must be paid during the month. This can include your groceries, childcare, like school fees, phone payments, mortgage payments, and so on. Then label fixed and variable expenses. So take the list created in step 2 and then label each expense as variable or fixed. A fixed expense is an unavoidable bill. So this is something you have to pay, and oftentimes it is the same amount month to month. A variable expense is a bit more flexible. So oftentimes the amount you pay could vary, or it's just a bill that is a bit more flexible when money gets tight. So for an example, if your money is tight for the month, a variable expense could intentionally be decreased to afford the unavoidable bills. So let's say, for example, in a month you'd see that you won't be able to pay your groceries, your child's school payments, and your gym membership. So the child's school and your groceries are very important unavoidable bills. But the gym membership is something more of a want, and it can be a bit flexible. So for example, you will cancel your gym membership for that month to ensure you have enough money to pay your groceries and the child's school payments. Fourthly, determine the average monthly cost for each expense. Now you list next to each expense how much you expect to pay for that expense during the month. If it's an expense which has the amount varying from month to month, you can use the 3-month average calculation in order to determine an amount you expect to pay. So this is your total spending on the expense for the past 3 months divided by 3. Then lastly, make some adjustments. If you see that for the month your expected expenses are going to be higher than your expected income, you need to make some adjustments to make sure that everything with your money works out for the month. For example, you can reduce your variable costs. To avoid debt, regularly also adjust your expected spending costs as well as actual spending costs and reduce variable costs. It is also usually a good idea to save the rest of the income you have left at the end of the month. Now, this 50-30-20 rule is something that a lot of people like to use as a basic framework of how to budget. Now, what is it? It's just a budgeting technique that divides your take-home income into three categories with percentages. So, the dividable, spendable income, we will try to divide 50% of that income to needs. Now, a need is something essential which you must buy or which must be paid for. So, for example, groceries, utilities, or rent. Then, 30% of your income you want to spend on wants. So, want is not something that is essential to living, but as it states, it is something that you want. It is a bit more of a luxury rather than a necessity. So, for example, new designer clothing, a vacation, a gym membership. And then 20% on savings or debt. So, like something towards your retirement fund, university savings, credit card payments, and so on. Now, let's do a quick simplified example. First, calculate your net income. So, R1,000 on net income for the month. Now, when planning, we ideally want to spend 50% on our needs, 30% on our wants, which is R300, 30% on our savings and debt, which would be R200. Now we go list the monthly expenses that we expect to pay during the month. So here are a few examples: rent, insurance, credit card, groceries, and so on. Now we are going to go label those expenses. So I labeled all of my needs with blue. Now a need is usually something that is fixed. It is an unavoidable bill. You need to pay for it. You need it as an essential thing in your life. Then I indicated my wants as yellow. Wants are usually quite variable, as it is not something that you need to have, so it's a bit more flexible when it comes to spending money. And then pink I used for my savings and debts. Now, savings and debt can be rather variable or fixed. Now we will be calculating the average cost per expense that we expect for the month. So for rent, we expect it will be 270. Insurance, most likely 60 Rand, 40 Rand. Now, just important to remember, budgeting is very important because it helps you to plan out how you are going to spend your money during the month, and then also helps you to ensure that the amount of income you have available will cover all the costs that you expect to be paying this month. Now, when we calculate the total of all our needs, we see it's 640 Rand. This is more than the 500 Rand we actually wanted to ideally pay for these needs. Now for the wants, we calculated a total of 410 Rand, also more than the 300 Rand we would like to spend on it. And then lastly, savings and debt is only 40 Rand, which is less than the 200 Rand we want to spend on it according to the 50-30-20 rule. Now this gives us a total of 1,090 Rand. This is 90 Rand more than the income we have to spend on this month. So let's see what we can do with a few adjustments to make sure that we do have enough money to get through this month, as we currently have a shortage of 90 Rand. Now, a need is fixed yet again. There's no flexibility really, and all of these needs are things that are essential in your life. You can't go without rent. You can't go without groceries. You need to pay for childcare. You need to pay the utilities and the insurance. So these are quite important amounts which you're not able to exactly play with. So unfortunately, even though we only wanted to spend 500 Rand on the needs, we are still going to have to pay 640 Rand. So now we are going to try and recover some money from the more variable expenses in order to ensure that we do not overspend our income. Now, for example, these Nike shoes. We don't need to buy a brand name. If you need shoes, you don't need to buy the most expensive one. So instead of paying 150 Rand, we will only be paying 80 Rand, meaning it is a 70 Rand less payment. Now, we still need another 40 Rand in order to ensure that our wants recover back to 300 Rand. So now we will be reducing the amount of entertainment we would like to spend from 200 to only 160 Rand. And now the total of our wants will be 300 Rand, which is 30% of our total income. Now at the end of the day, our total expenses only equal 980. And now we have an additional 20 Rand to save. So as you can see, this planning is very important. Now, not only are we able to cover all of our costs during the month, but we are also able to save a 20 Rand. Yet again, I would just like to emphasize when something is a want and it is more of a variable cost, you can decide how you would like to spend it. So for entertainment, you just decide, you know what, I'm not going to go to the movies like 5 times this month. Let's say only 2. I'm going to reduce the payment. I don't need to buy the brand shoe. I can get the same quality just without a name for cheaper.
Do's and don'ts. These are commonly required for a successful budget. According to Epiphania, in her 2022 article, The Do's and Don'ts of Budgeting, on the Grace Girl website. Do's. Determine regular income and expenses. Try to reduce expenses. Create a realistic budget. Fill emergency fund for unexpected expenses. Remember to track progress and revise budget as needed. Don'ts. Do not forget to account for irregular income and expenses. Do not save too much too soon. Do not overspend in one area. Do not underestimate exactly how much you spend on food, entertainment, or other items. Do not get discouraged if you make a mistake or have a bad month.
Please find attached our references for if you would like to read up a bit more regarding this subject. Thank you so much for watching this video. Please go check out our other videos as well and our Instagram page.